Ladies and gentlemen, in yesterday's video, I sat here and I said to you that this is the most important level, the most important couple of weeks, the most important retest of the entirety of 2025 and possibly extending right back deep into 2024 as well. And I stand by that. In fact, not only do I stand by it, I reinforce it with more evidence today by looking at the $3 trillion resistance level on the total cryptocurrency market cap chart, which will be the be-all, end-all for Bitcoin. If we crush this level, if we conquer this level, Bitcoin, cryptocurrency as a whole, even the altcoin market, will see a resurgence to a massive degree. And if we reject, it could get very, very ugly. So I'll be focusing heavily on those two things today, specifically the total cryptocurrency market cap, because we didn't mention that at all much yesterday, and I think it is worth mentioning. I'll also be looking into the short-term charts on Bitcoin to give you an idea of where the short-term levels are, and then I'll look into some scenarios. If Bitcoin does manage to break out, where will it go next? What are the next targets for Bitcoin? And what will happen if Bitcoin rejects here? We've got a bull case and a bear case in that regard as well. Because obviously a rejection doesn't necessarily mean it's over. It could just be a healthy pullback, so we'll look into that. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. So what led me to say that this is the most important level of 2025 in yesterday's video? Well, it's very clear in my view. All we need to do is look at where areas of resistance and support are on the Bitcoin chart and quantify those levels. We know, for example, that Bitcoin's prior area of macro consolidation was between these two white lines right here, and those two white lines stem backwards from 2017 and 2021 respectively. And we know also, for example, that Bitcoin had a major pattern, a descending wedge formation, which it actually broke to the upside. So we know after that breakout, we broke back into our prior macro consolidation range, crushed the neckline at 88,000. Where else is the resistance? Well, we know, of course, there's resistance around the all-time high region as per that upper white line and horizontal resistance at the all-time high. But what about this massive gap we've got here between 97,000 and about 110,000? What lays there? There has to be something, right? Because we consolidated in that price region for months on end back at the start of the year and the end of last year. And this is where the volume profile comes in handy. Even though it's very, very messy and we can't clearly identify based on, using our eyes really or observation where resistance precisely is within this range, it is a price range of about 30,000 US dollars. And so there has to be something. Volume profile helps us dramatically here. We bring up the visible range volume profile and we see that the most potent area of resistance, the area in which the most BTC has been traded, right? Selling and buying historically is at around 98,000. This massive spike in the volume profile is 98,000. It's exactly where we are at right now. And it's no coincidence that this pump has slowed down as we've approached this region. This is, as I mentioned in the introduction, literally the area of most resistance on the chart that you can see on the screen right now for Bitcoin, meaning if we can conquer this level, we have flipped a massive resistance zone for support and we will form a very strong bounce point through which we can start aggressively attacking all-time highs. The opposite side of that is if we reject here, if we fail to break out from this volume profile POC, from this level at 98,000, we risk forming a lower high, which could roll into a bear market and a downwards trend in a similar fashion to what happened in 2021. So in 2021, for example, we had a very important level on the volume profile around here, around this region here. We can actually zoom right up to get that volume profile triggered in this price region. And you can see we had this spike in the volume profile. This spike wasn't here yet because we hadn't seen that consolidation yet. But we saw basically an attempted bounce and we couldn't do it. There was too much of a crevice in the volume profile. Uphill battle, we couldn't do it. We formed a higher low. or a lower high, I should say, and we rejected downwards. We saw a dead cat bounce and continue the downwards trend. It's a little bit of a different structure, but the general premise still remains. What we have on Bitcoin is a major area of resistance, the most major area of resistance for certainly the last 6 months, maybe even the last 8 months since our breakout from this descending channel at October 2024. And therefore, we have a major crossroads. Do we break above it? Do we bounce off of it and enter all-time highs? Or do we reject from it and form a dead cat bounce and potentially roll into a bear market? I suppose there is a third scenario as well, which is also certainly on the table, which is we see a short-term rejection, we see a higher low form, and then we attack it again and break upwards. Obviously, there's multiple different scenarios that could occur here, but it doesn't change the fact that this level is incredibly important. We discussed all of that yesterday, and we will dive into those short-term scenarios a bit more in a moment here, but I really want to first consolidate this major point. It's not just Bitcoin experiencing this. If it was just on the Bitcoin chart, it'd be one thing, but it's also on the total cryptocurrency market cap chart, which again really confirms this as a major level. The total cryptocurrency market cap chart actually probably is facing a more important level than Bitcoin is, because on Bitcoin, this is just a local level stemming from the last 6 months of price action, which I suppose calling that local is a bit of a stretch, but you get the point. On the total cryptocurrency market cap chart, this level actually stems backwards from a 2021 all-time highs. The two horizontal red lines here are basically the daily candle close high of 2021 and the wick close high of 2021, and they both sit at the $3 trillion psychological resistance level, meaning this is a level not only that is a psychological resistance level, it's also a level from 2021's peak bull market where we rejected from, and the fact that we're coming up to it right now and seeing a hard time getting over it, at the same time as Bitcoin's doing its thing with the $98,000 level. I mean, this is really potent here. This is a very, very strong resistance zone market-wide, not just Bitcoin isolated, but also for the altcoin market and Ethereum. So I cannot stress this enough. All my eyes, all two of them, all two of my eyes and all of your eyes should certainly be on the $3 trillion resistance level for the total cryptocurrency market cap, and also on that basically $98,000 level for Bitcoin. If both of those levels break, that is when you can look to get pretty bullish on this market again. And that is when you can look to see for all-time highs in the coming weeks. Until that occurs, this is actually a zone in which I'd like to be cautious at. I'm certainly not placing buys here, that's for sure. And that doesn't mean I'm not bullish. I am bullish. I do think it will break eventually. I do think we're in a macro bull market. The 4-year cycle certainly suggests that. But until it actually breaks, we can't be confident in any short-term or medium-term upwards price action, because there certainly could be a pullback in between. And this is just a major rejection zone. You don't really want to be buying at major rejection zones regardless of what the macro cycle says. So now that we've really hammered down the importance of this level, the most important level of 2025 certainly, I'm almost certain in that. In fact, I don't think it's an opinion. I think it's a certainty. We can look to see what the scenarios are here. So obviously, one of the scenarios is we break out from this level and we attack all-time highs. That would be about, obviously all-time highs 109,000, but seeing as both of our all-time highs were placed on this uptrending white line, we'd actually attack that uptrending white line. So we could be looking to 113, 114,000 next. Above that, we could be looking to something like 130,000, which we can identify using this logarithmic regression channel that I've made on this chart here, as you can see on the BLX. Essentially, it's an angle-based logarithmic regression channel. Each angle is half of the prior cycle's angle, and this leaves us into a point of extrapolation. We can extrapolate the data further and assume that if we see a 6.2 angle of appreciation in this cycle, and we top out around the end of this year, which is what the 4-year cycle suggests, that would put us at about 130,000. So I suppose the next target would be 130,000. Therefore, our upside targets, if we do break this level, are going to be about 115,000 and 130,000. Beyond that, we're not sure. Some downside targets obviously could be, well, one of the scenarios is we just enter a blanket bear market, but one of the scenarios is we enter some sort of short-term correction, which is actually quite bullish, in which case some of our downside levels we'd be looking at quite closely is the bottom of this macro range in white, which is 91,000, or 88,000, which is kind of the neckline of our W pattern, our double bottom pattern that we had in March. So 88,000 and 91,000 are particularly interesting to the downside. Those will both be healthy levels to retest. On a more short-term basis, we'd be looking at a neckline right here at around 95,000. So we've got a few levels of support below us. It's not like there's nothing there. If we do reject here, it's not the end of the world. However, as soon as we start pushing below 88,000, and particularly below something like this yellow ascending support line in dashed, which all of this is very nuanced, and we could do a whole video on just these lines alone, but I'm just trying to keep it short here so you get the points mainly. As soon as we start attacking something like 77,000 or even 70,000, that's when we start pushing into what I consider to be bear market territory. So as long as we're above 70,000, fundamentally, we're still in a bullish market environment, but realistically, we actually want to be staying above 88 for maximal bullishness on the short-term basis. Even if we do see a short-term rejection, as long as it's above 88,000, we're still in a very, very strong position on Bitcoin, and it wouldn't be unexpected at all to see a short-term pullback from such a major level. It would just be about that pullback not being excessive at that point. Now, as all of this is going on, luckily the traditional markets are pulling back to the upside. We had all that tariff stuff, all that trade war stuff coming out last month, and it pulled the market down dramatically. S&P 500 I'm talking about here, but we've seen a massive recovery. We're attacking resistance right now, and overall we'll keep monitoring that, but it seems pretty decent at this point. I doubt that we'd actually develop a full downwards trend here. If it did, that would mean a lot for the macro cyclical structures, which at this point are still intact. And at this point, we've still got, 180 days. We've still got half a year left of this cycle. So we should actually be looking to the upside more than the downside here, in my view. So guys, that's the video. It was short and sweet today. No need to drag it out. Tomorrow, I will be discussing quantitative easing and what it has meant for Bitcoin historically and what it means for Bitcoin in this cycle. Of course, the QE cycle, the quantitative easing cycle, the money printing has not started yet on any dramatic scale in this cycle so far. And given that we've only got 6 months left, is that something to be concerned about? That's something I'll look at tomorrow. I'll look at unemployment, traditional markets in general, the macro economy, and it should be an interesting video topic. So keep an eye out for that. There's a lot of misconceptions there as well, which I'll try to clear up. Guys, thank you for watching. I'll catch you tomorrow. Before we end off here, use that link down below to sign up to the Bitunix Exchange. I don't just advertise exchanges freely. I do deep dives into them. I use them myself, and this is my primary exchange at this point. I handpicked it myself. I reached out to them for partnership. They did not reach out to me because it's got various things that I like, various things that I use personally. It's global, non-KYC. You don't need a VPN. It's never been hacked before. It's got hundreds of trading pairs, the exact same amount as exchanges like Binance. Okay, so very competitive in that regard. And of course, it's very low in trading fees, made even lower with my 15% trading fee discount that you will get if you sign up with my link down below. So check it out down below, guys. Thanks for watching. Hope you enjoyed. I'll catch you soon.